Good morning. It's Wednesday, March 19th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. Thank you all for subscribing yesterday. We got through that 10,000 mark. We got through that big milestone here, and it really means a lot to me. I appreciate it. So we sent out an updated chart pack here yesterday. If you're a client, you didn't receive it, send me a text and I'll email it over to you immediately. Now, looking at some of the strongest markets here based on technical strength, no changes here. Still gold, feeder cattle, and copper are your three best looking charts in my opinion here, and a lot of the technicals confirm it. Looking at Tuesday's recap and the performance leaders, the volatility index was your best performing futures, up about 2.8%. And why? It was a bit of a risk-off trade here in the U.S. equity markets. That spillover effect crossed over into Bitcoin and Ethereum as your two worst performing futures. And then you had silver up about 1.5%, sugar up about 1.3%. We outlined in the sugar market some of those fundamentals here, some of the adverse conditions that are happening in South America as far as their crop and their production, and also India unable to export as much as what they were looking at before. We saw sugar futures cross above the 20-day moving average. And then finally, copper futures up about 1.6%, trading above that 5 handle here, trading at 504 last up to 70. Something interesting about copper futures are trading near a 5-month high on signs that supplies in China, the biggest metal consumer for copper, are tightening here. So it says the shortfall in Chinese supplies have seen the nation's copper futures switch to what's called backwardation. So the prices are higher now in the front month than they are in the back months. And what's that the tall tale sign of? A squeeze on the copper contract here. That's why if you're going to play like a silver squeeze, you want to be in the front month. You want to own the most short-dated futures contracts that are out there, because if the squeeze occurs and people are scrambling the end user to get a hold of it, well, they don't care about supplies coming online 6 months, 9 months, 12 months from now. They want it here and they want it now, and that's where backwardation tends to occur. Now, looking at your other markets here, your system buys, we had, and that's also for informational purposes only, we had no buys or sells yesterday. Yesterday we saw that trigger in the platinum to the buy, but what did I tell you? It's essential that we see follow through once the signal is generated, and the signal was flagged because of the negative price action early in the trading session. So the level to watch on the platinum market is 1040, because we will have retraced the overnight sell-off, which is $16 right now, and then we'll punch through and made a new high on the charts. And at that point, we can start to look at targeting some of those higher levels here, potentially up to like 1050, 1060. So you'll want to see that trend line come into play here again. Now, looking at the overnight price action of the precious metals, you got gold essentially unchanged, trading at about 30.40, 30.42. High in the overnight session, 30.52. Low of the overnight session, 30.31. So right in the middle of the range here. It is a big day. We do have the FOMC meeting. Looking at the silver futures, 34.53, down about 28 cents. 34.79 being the high, 34.27 being the low. Yesterday, if you look at that chart pattern on the silver market, double top here at right around $35. We went up to 35. Back in October, November, we got up to about 35.07, and that was where the top of the market was at. The gold-silver ratio ticking up to about 88-1. So gold trading near that record high, really weighing in what's the Fed's next move here. So year to date, you do have gold futures up about 15%. We had some geopolitical tensions rising yesterday that kind of boosted the energy markets early in the session. We had a little bit of safe haven demand coming into the gold market as well. So much of the price action today is going to be impacted by the FOMC meeting. So that's our key event. There's a 99% chance that there is no interest rate cut here today based on expectations, but you go farther out and you look at what is the dot plot showing, and it shows about 58 basis points of interest rate cuts. And what does 58 mean? Because the Fed tends to make 25 basis point interest rate cuts and hikes. It means that it's pricing in 2, but a slight chance for 3 at some point throughout the year. So it's 58 at the moment. So if you look at the percentage chances, you go to the May meeting, it's a 15% chance. You go to the June meeting, it's a 64% chance. You get to July, it's 72. That's why they're saying June, July, that's where it's really going to come into play. Now, the key to today's meeting is a summary of economic projections. That's known as the dot plot. So what happens is they come out, they say there's no interest rate cut. Then 30 minutes later, Jerome Powell takes the stage here, and that's where you get the popcorn, you watch the volatility in the markets. You're expecting about a 1% swing in U.S. equities, up, down, back and forth, who knows here, but that's what the options are pricing in. Now the Fed, what Powell's going to say, and this is my opinion, is that the Fed needs clarity in 4 different areas before they're confident that they can continue the easing path. They're going to want to look at Trump's policy. They're going to want to look at immigration. They're going to want to look at fiscal and also regulatory policy. And the net effect of all that really dictates how the Fed reacts and how the cuts happen. Now, I do expect him to be more dovish in his stance here with an outlook of potentially 2 to 3 cuts, but we have seen some softer inflation readings and softer economic growth. That's where the dovish mix comes into play. Now, getting back to the metals here, the ETF flows from the previous trading session because this is important. Exchange traded funds added 47,446 troy ounces of gold to their holdings in the last trading session. They bring this year's net purchases up to 4.13 million ounces. Here's where it gets interesting. 6th straight day of growth here on that market as far as ETF strength. So the ETF investor has been coming into the market, into the metals, and we need this type of mix here to really boost the silver market. So the ETFs, they added 4.99 million troy ounces of silver holdings in the last trading session, bringing this year's net sales up to 493,000 and some change here. This was the 3rd straight day of growth and the longest winning streak since February 19th. So you get into year-to-date changes, gold up 5%, and silver just about unchanged here as far as those ETF flows. Now looking at some other things here, checking on the outside markets, we are looking at energy prices. They are pulling back here just a little bit. Some of the concerns about the stockpiles in crude oil, we saw a boost here of about 4.6 billion barrels in those inventories according to the API. We will have oil inventory data coming out. They're expecting a build of 800,000 barrels. Now your critical levels here on the gold market that I'm going to be watching here is when you look at the way we've been trading, we've been in this upward channel. We're at the top of the channel right now. Historically, gold's routine and its personality is we go up to the top of the channel, we consolidate for a bit, we go back up and we hit that thing. That's how you get this upward steady move here. We haven't really had that big of a washout. The last washout down to the bottom of the channel was on that December 13th meeting. What happened? Jerome Powell came out and said that they were on the fence as far as doing an interest rate cut, and that it wasn't really priced in the cards, so they just kind of gave it to us. And that's when gold went, oh my God, they're not going to cut rates anymore. And that's what it priced in. We sold off to about 26.50, 26.75 before we started that upward move. So the question is, do we consolidate here or do we get the blow off top to the upside? So we're going to have to wait and see. What's interesting is the pivot point right around 30.32. I think your critical level of support about 30.15 down to 3,000. I would expect to see some kind of degree of buying come in right around that 3,000 mark on the dip buyers. Then your pocket support is going to be 29.92 down to 29.85. 28, we're not going to see that for a while in my opinion. Your first resistance point right around the highs, 30.50 on up to 30.56, 30.71 and 30.95. So I'll put the updated numbers in the silver market because we're running out of time here. It's going to be a really busy day here and it's going to be a backloaded day. So we're going to get some positioning going on here. Then we're going to sit back, we're going to eat our popcorn, we're going to watch Jerome Powell here and what he's got to say. And then the fireworks really go off here in these metals markets and also the U.S. equity markets here as they're going to hinge on every single question and answer that Jerome Powell delivers to the press here. So if you got any questions, give us a call. Remember, futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading, go get them.